Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. In this video, we'll be talking about Tesla. And why Tesla? Well, the second quarter earnings results has just come out at the start of this recording. So we'll talk about their financial results. But first, before we do that, let's go over the technical analysis of Tesla and what I specifically think will happen to its share price in the near term future. So what you guys see here on the screen is the daily time frame for Tesla. And what I see personally is a grade A high quality setup. And there are two reasons for this. Number one, first of all, we've been in a very hard downtrend for the price action, right? It's very, very apparent here. And if you even zoom out further, right, we've been downtrending for months, right, ever since we started 2022. Now, since we've stopped this downtrend, we've actually been basing. How do we know this? Well, we've been respecting a very specific range. We have a major level of support at 620. That's kind of the line in the sand level that I don't want Tesla to ever break in the near-term future. And then we have a upper ceiling or resistance around 780. And we've been respecting this for the past month and a half. So that's how I know that sellers have been a bit exhausted here and buyers are starting to step in. Now that's number one. Number two, we're seeing a very nice chart pattern forming, specifically a wedge or symmetrical triangle chart pattern. And if you guys are confused why I said two different names, well, they're not. They're both synonymous names and they describe one singular chart pattern, right? This wedge looking chart pattern. And personally for me, I call it a wedge, and it doesn't matter if anyone else calls it symmetrical triangle because both of those names describe one single thing, and that thing is that this chart pattern provides two different points of entries, one to the long side and one to the short side. And specifically, Tesla is looking to provide an entry to the long side. Why do I say this? Well, if you take a look at this descending level of resistance, right, we've retested this resistance trend line multiple times and way more compared to this ascending support trend line that also makes up the overall wedge chart pattern. If you guys can't see it, let me make it more apparent for you. So we have one retest here, okay? And then we have another second one right here, okay? And then we have another one right here. And then we had another one just today, right? So we had 4 tests, retests on this descending level of resistance. And if you take a look at the bottom here, right, we only see 3 touches on this ascending support trend line. So why is this important? Well, in stock trading, right, especially when you're looking at technical analysis for that personal edge, whenever the price is hitting a certain level multiple times, there's more of a chance, okay, more of a probability that that price will break out of that level because of the fact that it has tested and retested multiple times. And that level can be a support or resistance. It doesn't matter. All that matters is that the price has retested that level multiple times. And in this specific case, Tesla has retested this descending level of resistance multiple times and way more than the retest on this ascending support trend line. So where do I see? Okay, so where do I see a potential long-term entry, and where would that long entry trigger, especially with this potential opportunity to the long side? Specifically, that level is 750. So for the rest of this current trading week, I'm going to be looking at 750, and I'll also right now and show you guys. I will be creating a level right at 750, right? So the reason why I chose 750 is that, well, it has been a level where we've rejected multiple times on the intraday timeframes and on the daily timeframes. If you guys can't see it, well, if you take a look at these candlesticks right here where my mouse cursor is currently pointing at, you guys can tell that the price has reacted at this 750 level. If you just take a look at this one specific candlestick, the high of this candlestick was 749.89. And if you round up to the whole number of 750, well, there we go. We get that level of 750. It's as simple as that. And if you take a look at this second candlestick, the high of this candlestick is 749.91. And if we also round it up, we also get 750. If you take a look at this one, this is already above 750, and the high of the day of this candlestick was 751.55, right? So I can go on and figure out where these high of the day occurrences has happened. So with the 750 level, if we do decide to trigger this level tomorrow, thanks to earnings momentum and buyers coming in and stepping in with a lot of buying momentum, I think there's a good possibility that we can see a very, very great swing for the rest of the week, or a great scalp / day trade for tomorrow. And there's some potential profit targets for tomorrow, specifically the 760 level, right? So let me get rid of these arrows here, right? So the reason why I chose 760 is that, well, this is also, just like 750, a level where we've seen sellers step in and reject the price to the downside, prohibiting the price from reversing higher, right? And also, this level has provided some very, very good, very, very good area of supply where the price continues to get compressed, right? And I love the fact that Tesla has been compressed around the 760 level, because if we hadn't, then we wouldn't have formed a sufficient and viable base here where we started to accumulate buyers, right? So, I think if you're able to trigger that 750 long entry tomorrow, our first profit target will be 760. And that's already a 10-point move and return at that 750 entry, right? And, if you guys are using basic risk to reward ratios, that will be a 1 to 10 risk to reward ratio, right? Where you're risking $1 to get a reward of $10 from your point of entry, which is 750, right? So obviously, I don't recommend choosing a $1 risk there, right? You don't want to choose a stop loss of only $1, because Tesla is a very wide moving name, right? Every single day, it moves at least, average 10 points. So having $1 for your risk from your entry point won't be viable. So 760 will be our first profit target. But if we do get that momentum tomorrow, if we get that ball rolling with buyers, really stepping in and spilling over the shorts who have been pushing the price lower around the 760 level, I personally think that we can squeeze higher until we hit that 780 level. So this is my final profit target for Tesla for this week, especially if we do get that momentum rolling. Now, in the long term, I think Tesla needs to get back to retesting that psychological $800 per share level. And that's not too far off. Percentage-wise, if we get my tool here. So from today's close price, which is around 742.50, okay, that's about almost, if you round up, 10% move, right? So around 7.80% move. And that's not too much, especially with after hours. Tesla almost reached that level because Tesla was up on, I believe, about 5%. But right now it's currently sitting around 1%, I believe. Oh, less than 1% now. It's at 0.74%. That's not bad. But there's a reason why Tesla's reaction after hours came back down. And that's also a great segue into the financial results. So the number one thing that made me kind of raise my eyebrows is Bitcoin. Okay, so Tesla has sold 75% of their Bitcoin holdings in the entirety of the second quarter. And they've converted that Bitcoin back into fiat currency, and that fiat currency has directly contributed to their free cash flow in their balance sheet. And it kind of makes me, raise my eyebrows at that because did they do that? Because, obviously right now, if you guys aren't living under a rock, the cryptocurrency markets are in a turmoil. Every single market right now, except the housing market, has been seeing a rather large decline in prices, especially with cryptocurrencies, major cryptocurrencies filing for bankruptcies and a lot of scandals out there, right? So, Bitcoin and Ethereum, those two major top coins have been taking a hit as we might be expecting a cryptocurrency winter, but that's another topic for another day. But with that sale, essentially Tesla is one of the crypto whales, right? Crypto whales are, if you guys didn't know, are people or entities who have a very large purchasing power and selling power. And with those purchases, they can really just drive cryptocurrencies market to the upside, and with their sales, they can drive the cryptocurrencies to the downside. But I personally think it's not a negative that they've sold cryptocurrencies because, first of all, they chose to add Bitcoin as an asset, right? But at the end of the day, after they've really dug into Bitcoin and actually bought hundreds and millions worth of Bitcoin, it's a very, very, well, it was essentially a very risky and volatile asset to have on their balance sheet. So I think it was very prudent for the long term that Tesla as a whole decided to sell their Bitcoin, 75% of their holdings of Bitcoin, and they've only left 25%. So long term, I think shareholders should be happy. It's a very positive sign that they're moving away from such a risky asset and investment. And I get it. There's a lot of people who are hyped about Tesla and their Bitcoin investment, but to be honest, cryptocurrencies can be very, very, very volatile, and especially when a big company like Tesla with a lot of cash reserves, right, free cash flow, uses up a large portion of it to, buy cryptocurrencies. It's kind of alarming, kind of worrying. So I'm truly glad for the long term that Tesla decided to take off Bitcoin. Now, the most important number though, rather than Bitcoin. All right, so this Bitcoin news is going to fly right over people's heads, just like that, right? Very, very quickly, and people will forget that Tesla was ever in Bitcoin. But obviously, the next major news that I would expect out of Tesla with cryptocurrencies will be, well, if Tesla decides to add back and average down on their Bitcoin holdings. But I don't think that's going to happen anytime soon. So the most important number that I think was very, very important, and I think what investors and shareholders have been looking for, was their automotive gross margins. And it's basically the gross profits of what they make out of their cars, right? And first of all, their revenues for this quarter grew by 42%, which is actually amazing. And out of that revenue, though, the gross margins, the automotive gross margins were down. Okay, and the gross margins was at 27.9% for the second quarter of this year. But if you look at the previous quarter, so quarter one of 2022, it was at 32.9%. And then just a year ago, at the same time period, it was at 28.4%, right? So if you look at the year over year numbers, right? So it's at 27.9% today. That's what they reported today. And if you look a year back at the same period, it was at 28.4%. So basically, if you compare both of those two numbers to the current number right now, it doesn't look good, right? And that's the reason why I think Tesla, after rising nearly over 5% after hours, is now back down below 1%. Is because of that specific reason. The market is pricing in the fact, well, that Tesla is slowing down as a company, right? They're slowing down as a company. Tesla has been warning, specifically Elon Musk has been warning everyone, the public, its investors, its shareholders, right? That they expect a lot more troubles in the next few years. Why? Well, first of all, he talked about the cash burning of their gigafactories, right? In Berlin, basically in Europe, and in the US and Texas, right? And, you know, I believe the word bankruptcy was flying around as well about Tesla, and that really spooked some investors. And I'm pretty sure some long-term shareholders decided to get out once they heard that directly coming from, an outright statement coming from Elon Musk that there's a potential that these factories can shut down because of the fact that they're really just burning up cash. So, if you want to see a long growth company doing progressively better in the long term, you don't ever want to see them losing their free cash reserves from their own, doing. So, I think Elon Musk did a really well job of kind of informing investors that this would happen. And also, I told my CFO Swing Watch members right before earnings came out today that I'm not going to expect too much out of Tesla earnings. Why? Well, because first of all, we have a lot of issues going around for companies like Tesla. Specifically, number one, inflation issues. Number two, macroeconomic issues, especially with the Russo-Ukrainian war going on in Europe. And number three, supply chain issues. Number four, surging EV demand while we have that supply chain issues, with supply dwindling. And number five, materials. Right? I think that's one of the major issues about Tesla, because Elon Musk said it a few months back, right? Materials is the most important part in keeping Tesla alive, specifically lithium, right? Lithium is a limited resource on Earth, on the planet Earth, right? And, I think personally for me, I think that's the reason why Elon Musk is investing so much into space, because eventually, I think personally for me, long term, I think he wants to send satellites and probes to go to asteroids, right? To start mining in space. It sounds very outlandish, but it's very probable with his own space company, right? SpaceX. And I don't think it's really out of question if Earth decides to really run out of its lithium reserves. So, if Elon Musk decides to do that, he really does have the resources to actually send some mining probes out into space to asteroids that have, millions and billions worth of lithium. So, with all these issues going on right now, I think it's reasonable that Tesla provided these results. Like I said, revenues grew 42%. Which is great. They beat on earnings, right? I believe with revenue though, they didn't beat the expectations, because Wall Street was expecting 17.10 billion in revenue, but they only reported, well, quote unquote, only reported 16.93 billion for this second quarter. And if you want to compare it to the previous quarter of this year, they did 18.76 billion, right? So obviously that was kind of a fall from first quarter, but I still think that they're doing great, right? But with all these pressures, especially like the factories in China, right, Shanghai, with this COVID lockdowns, I think it's also going to provide some more uncertainty and risk for Tesla to continue to deliver cars around the world and manufacture very good cars to the consumers. Now, personally for me, I think these numbers that came out today was not too bad. Sure, short term, I think the shareholders are not going to look at it optimistically, but in a longer term, the next 10 to 20 years, I think Tesla is now trying to pivot from being a growth tech company. Yes, I say tech because Tesla is essentially a software company, right? It's using vehicles as kind of a conduit for its software, its AI technology, right? I'm pretty sure some of you guys have thought about this before as well, and you guys are completely correct, because Tesla is essentially a tech growth company where they're implementing their own AI tech onto manufactured cars that they own and build themselves, right? Especially with their lithium batteries as well, their lithium battery technology. So overall, I think Tesla is a mixture of a good mixture, to be honest, of tech and as a car manufacturer. And as it's kind of slowing down its exponential growth, right? I mean, these numbers are essentially telling you that Tesla essentially peaked with its revenue growth and earnings growth, I believe, back in the last quarter of 2021, and possibly maybe even this first quarter of this year. So, what is Tesla saying basically to shareholders? Well, I think they're pivoting from a tech growth sector company into a more of a value company. Now, you might be scratching your head saying, "Hey, Andrew, what in the world do you mean by that? Right? Why would Tesla ever be a value company? Right? It's not like it's going to be a company that Warren Buffett is going to invest in, right? Or investors alike, like Tesla, like Warren Buffett is going to invest into Tesla because it's a value company. Because right now it's obviously not a value company. Now, the answer to that question is that, well, Tesla, all right, has been seeing such global hype, and I believe, it's kind of true to contribute the EV hype to Tesla, because they're the ones that really, well, thanks to Elon Musk, first of all, thanks to the publicity of Tesla and its outspoken CEO, Elon Musk. I think the EV industry has completely changed thanks to Tesla. And with that hype came with exploding exponential growth in Tesla as a company, which allowed its valuation to skyrocket along with its share prices. Now, I think at some point, this growth company is going to start seeing its peak, where it starts to pivot into more of a value-based company where it's focusing on its products more and is focusing on service-based, revenue, right, and the like. And I think that's a great transition for Tesla at this point, because if they want to continue to stay growing, but at a very slow pace and a consistent pace, right? Because consistency is what matters, viable consistency for value-based companies. And I think as Tesla's surging demand slows down and their revenue growth and earnings growth start to slow down as well, they will eventually have to and be forced to pivot to being more of a value-based company and focus on providing the best service and best products in the market, in the EV industry as a whole, to its consumers and for its shareholders. So, overall, I think Tesla still has a great chance to continue to the upside for its share price. I don't think Tesla is going to struggle financially just yet. And even if they do, I always think Elon Musk will have some sort of a flexible way to make sure Tesla will never, ever go bankrupt, right? I mean, this is one of his major, big projects that he's gotten into back in the early 2010s, and he's grown into a gigantic company, right? So, as every other major tech company continues to reel in from the economic issues that I've just explained earlier and listed out, I think Tesla is going to continue to follow with the other tech companies, with the layoffs and multiple, they're trying to really lower their input costs as well as a company. So I think in the long term, people will forget about such negative impacts on the economy and on specific tech companies like Tesla. So, in long term, I still expect Tesla to do really, really well. Now, the only thing that I worry about for the long-term future are the competitors, right? And right now, there's a lot of major car manufacturers in the world, especially in the Asian side of the world, with China, South Korea, right, and Japan. They're really expanding their EV industry, right? In China, we have NIO, XPeng, Li Auto. In South Korea, we have Hyundai, right? Hyundai and Kia really starting to take over with their EV cars, and they've really delivered a good amount of cars, surprisingly. and at a lot faster pace than what Tesla did in its early stages as a company. And we have Toyota in Japan, Nissan, and etc. Right, and Nexus. They're really expanding their EV fleet. So it's going to get really, really interesting as this EV industry continues to heat up in the next decade or so. But like I said, I think Tesla here has all the props to them, for providing such global hype, especially with obviously the high gas prices right now that we're seeing also contributed to the EV hype. But I wholeheartedly think that initially Tesla was the one that provided such global electric vehicle hype. Okay, so that's kind of it from me. I personally think, if you guys are looking to invest into Tesla, I would say wait until tomorrow. There's a lot of people who are looking to invest in the Tesla still at this share price. So hopefully they can have another stock split. But right now, even after its most recent stock split, the share price is already almost near 1,000 again. Right? I mean, it's still at 700, which is very, very close to that 1,000 whole number level. So it's not that far off. Okay, so that is it for today. If you guys want to join the CFO Swing Watch newsletter and get access to the private CFO Discord with monthly mentorships, okay, make sure you guys take a look at the link in the description box below. That link is hard to miss, so make sure you guys click on the correct link. Now, if you guys want to get 50% off on one of the packages, specifically tier 4, right? Tier 4 package, use the discount code 50 off. I will leave the discount code down below in the description box as well. But if you guys want to get 50% off, make sure you guys use that code. All right. If you guys like this video, make sure you guys leave a thumbs up down below. And if you guys aren't subscribed yet to the CFO YouTube channel here, make sure you guys hit that subscribe button and hit the notification bell as well, so you guys can get notified when I am live. All right, I'll see you all on the next one. Good luck trading tomorrow, and make sure you guys remember this: work hard and trade smart.